Hello everyone. This is my first experience recording market reviews in a video format. I have been working in the securities market for a long time, so for professional reasons I cannot publicly disclose my identity. Nevertheless, I would like to share my views and ideas with investors who are interested in quantitative and technical analysis. Over time I have developed a number of approaches and solutions that allow me to consistently generate positive alpha relative to the benchmark, and on this channel I plan to talk about them in more detail. I would greatly appreciate your feedback on this format. For now, I use AI voiceover and hide my TradingView nickname in order to remain anonymous to my colleagues. I would also be happy to receive your suggestions on assets to analyze, as well as topics related to quantitative analysis, which I often implement through my own Python scripts. To begin with, I would like to share my current view on the SPY index. So, let's begin. No, I don't think oil is ready to go to the moon. In fact, I would largely rule out that scenario. In my view, after the trend formed between 2020 and 2022, the oil market is now transitioning into a phase of large-scale consolidation. Therefore, if you expect a further major escalation of military tensions in the Middle East, I would suggest that the current phase of escalation has either already passed or is very close to its peak. Yes, I do allow for the possibility of one more emotional spike higher, potentially toward 120. However, if that happens, it would more likely serve as an opportunity to fully lock in profits on oil-related equities. In the portfolio, the chart, in my view, clearly points to the formation of a wide sideways structure in Brent, roughly within the range of $60 to $130 per barrel. In other words, the market is likely forming a large consolidation pattern, possibly a triangle or a broad sideways formation. With the price currently trading near the middle of this range, the more prudent approach may be to step aside and return to active trading only when the price approaches the upper or lower boundaries of the range. Considering how long such triangular or sideways formations can last, I believe it is quite possible that new all-time highs in oil may only be seen in the next decade. The real question is what kind of events will ultimately serve as the catalyst. I will periodically revisit the oil market and update my view as this structure continues to develop.